So the next is okay, great. Thank you so much. Okay, the next is income company. So instead of doing 2 weeks today, I actually want to look at income companies. So of course, still very dividend focused. There are a lot of companies that actually give good dividends. So this time round, I actually look at Hong Leong Finance. Hong Leong Finance. So of course, we know that with the increase in interest rate, the banks are going to benefit. So I think we talked about banks last year already. Hopefully you all did. I think last year there's a certain period whereby the banks PB all below 1. Please, so that time we will talking about it. Okay. So obviously now all the banks PB has moved up, and the banks are now really benefiting from the increase in interest rate. Later I can show you some numbers. So if let's say, for example, you still want to invest in a bank with the PBO up, is there still something there for you to buy? So I think this could be a potential candidate, Hong Leong Finance. Okay, so the price is finally moving. Is it still in time? So you can see for the longest period, Hong Leong Finance have been very flattish. So last what do you call that? Last 1 month, the price actually prop up. Is it still in time to buy? Okay. So as you can see here, why this is even the price prop up, why this is still attractive? Can you see the price to book value is actually very low? Okay, by the way, Hong Leong is a bank. Okay, they is a what do you call that? Okay, they have different classification, different level, different classification. Okay, so basically, I think Hong Leong Finance is more restricted. They are limited by the number of the branches they can have. They are limited by the number of ATM machines they can have. Okay, but they are still serviced as a bank. They are in the money lending business. Yeah, Indra, I always agree. I do agree with you, but interestingly, that's why it moved up. That's why it's like, wow, finally, finally moving. Okay, but in that case, based on PB, it's actually still quite cheap. Okay, let's dig into it a bit deeper. So what do they do? As you can see, down here, like I said, they work like a bank. Okay, they work like a bank. They do home loans. They actually can take deposits. Okay. And they have different kind of loans. Okay, vehicle green loan, new car loan, home loan, so on and so forth. Okay, so they can do they have different loans, and quite interesting. In fact, they are quite targeted at the SME. So if you have time, just go to their website. They can tell you all the different schemes. So like, for example, government assistance scheme, SME fixed asset loan, enhanced EFS trade loans. Hey, there's a question from Nora. Hong Leong Finance has no bank. No, Hong Leong Finance has bank. Okay. There is at least one at the Toa Payoh hub. Okay, I'm not too sure whether the government have refused about, because to be a full licensed bank, I think you need certain skills or something. I am not so sure whether did they actually go and apply.
Oh, for what I understand, they applied and got licensed in Malaysia. So the branch they have here is actually from the Malaysian side.
No.
No, that's HL Bank.
No.
The Singapore one is
Hong Leong
HL.
Finance.
That's the Hong Leong Bank. This one is Hong Leong Finance. The finance company in Singapore. They have a branch in Serangoon Gardens also.
Yeah.
So, but they're not banks, they are finance companies.
No, they are finance companies, so they cannot give overdraft. They cannot issue check book, that kind of thing.
But they can take deposits.
Yes, fixed deposits.
Okay.
And save.
They are part of, okay, so basically, okay, so in terms of banks, okay, so they are an entity of its own. So whether, the significant ownership is at Hong Leong Bank, we can actually check very quickly.
The Quack family, I think.
Yeah, like all belongs to them lah. So it's we can take a look. Who is the major shareholder? Let's see. Okay, you can see the ownership is here. Yep. So
Quite family.
yeah, it's the predominantly the Quack family. Yeah, so Quack Holdings. So in that sense, they are not exactly part of HR Bank, but of course, everything go back to the Quack family.
Maybe cousin in Malaysia or something like that.
Yeah. So yeah, the whole Jing gang. Okay. Okay, so possible run up due to the dividends possible. Yep. Yeah, we will look at that very soon. Hong Leong Bank branch in Singapore is a branch of Hong Leong Bank Malaysia. It is run by the Quack family cousin. Okay. So anyway, we can confirm. Let's go to the website.
The Hong Leong Bank branch in Singapore is called HL Bank, so they won't be confused with Hong Leong Finance, I think.
Okay, let's see whether I can get the branch. Okay, it's actually called Hong Leong Finance. Okay, let's see, locate us. Yeah, I believe it's actually called Hong Leong Finance.
Yes, this is Hong Leong Finance company. Let's go.
Yeah, I don't think it's called Hong Leong Bank.
No. The Hong Leong Bank Malaysia, the Hong Leong Bank Berhad branch in or subsidiary in Singapore is HL Bank.
Okay, so Kadipan, hope she answered your question. So HL Bank is HL Bank. Okay. Hong Leong Finance.
Two different entities.
Okay. So Laura, okay, so basically for full qualifying banks in Singapore, only 3: DBS, UOB, OCBC. So if you are referring to Hong Leong Bank, I'm not sure what kind of license they have, but they are definitely not the full qualifying bank license. Okay. Okay, good. Okay, thanks for all your sharing. Okay, great. Thank you so much. Okay. Now, yes, interest rate definitely have benefited them. So they are basically a money lender. So they lend money. Can you see the net interest income actually went up so much? So if you ask, if to answer to a Peck question, I think, I'm waiting for this one up for the longest time. Takes so long to come. Yeah, maybe it's the dividend, but yeah, this is a sort of like a slow stock. Okay, probably it's the dividend. Okay, but the business is definitely good. So in fact, they have not done much. So this one, all the banks have actually stated that they just don't have to do anything extra because interest rate increase, their profit will go up. So of course, now the question is, will the interest rate drop? If you are in the opinion that the interest rate is going to drop very soon, then maybe this is not so enticing. If you think that the interest rate will remain, at least for a while, then maybe this company, at least they can sustain this kind of profit. Okay, what I want to show you in this slide here is this. So in fact, their business also went up. Okay, can you see in 2022, their business also went up. So it's not like, interest rate go up, their loans actually came down. No. So in fact, I suppose again, compared to COVID lesser business running, yeah, the loan lent out is lesser, but for 2022, actually the business is actually back. Okay, so that's why they're enjoying lah. So not just they got higher interest rate on the loans, they are also extending more loans, as per what all the numbers are saying. Okay, so for banks, what we are most concerned is actually this thing called the non-performing loans. Okay, can someone help me here? What does non-performing loans here? Anyone can actually do a quick explanation, or if you prefer, you can unmute yourself. Is it that or confirm this money cannot take back? Okay, what does bad debt means? What does bad debt means? Are we still able to take back the money? Yes or no? Okay, not true. Okay, not true. Default provision. Eugene, you want to explain a little bit what does default provision means?
Means you put aside X amount to cater to a percentage that you calculate as a potentially not retrieving back this money.
No. Okay, so different one. That one is that one got different term. That one is called allowance for doubtful debt. But yeah lah, probably is default. Okay, but that one is not non-performing loan. Okay, so anyway, thanks for all your inputs. Basically, non-performing loan is whereby the loan they just did not follow the payment schedule. That's all. Okay, so these are loans that did not follow the payment schedule. Okay, so let's say, for example, I borrow from them for my housing loan. Then after that, or every month I'm supposed to pay 4,000, but this month I actually didn't pay. Then it will become a non-performing loan. So please take note, it doesn't mean that these are money sure lose one. No. Okay, that's the main point I want to put across. And second here is this. Okay, so based on their numbers, their non-performing loan is about 193. So what I want to say is this doesn't mean that this money confirm gone, confirm cannot take back. Okay, don't get the wrong idea. It's just that this money, they are not able to follow the repayment schedule. Okay, and the other thing I want to highlight here is this. A lot of all these loans, they are being secured. Secured means that they have a collateral. So like, for example, personally, I think I haven't really see my house title. Yeah, I can't even remember how my house title. Have I even seen it before? I may not even have seen my house title before. Okay, that piece of document that say that the house is mine. It's definitely not with me. So if let's say your property is on loan, okay, that title deed should actually also be with the bank. Or either that with HDB, if they're on HDB loan. So basically, if touch wood anything happen, the person cannot pay back the housing loan, right? The bank can actually go and mortgage the house to actually claim back the money. Okay, so the main point here is this: non-performing loan doesn't mean that money confirm gone. So in fact, if you ask me, with the secured is actually quite safe. I just want to put it bluntly, the banks are not the nicest people. So most of the time, the collateral is actually something quite solid, like for example, a property, or either that, something quite valuable, or like guarantees, so on and so forth. Okay. I don't know, man, Eric. I haven't seen mine before. I think I saw a physical one before, but yeah, probably with the bank. Yeah, I will let you know. I think 20th in mine. Yeah, about 20 years later. Anyway, yeah, thanks for sharing. So yeah, SLA documents. Thank you so much. Okay, so don't think that this money is definitely gone. Okay, so What I want to show you here is this. Basically, when in the accounts of a bank, when they actually look at the total asset, they have already taken away just on what Eugene mentioned, doubtful debts. Okay, doubtful debts are the one that cannot take back one. And it's just an allowance. Again, it doesn't mean that's confirmed this money is gone. No. Doesn't mean that confirmed this money is gone. Also, these are what I call doubtful debt. And this is already being minus off from the total asset. So what I'm trying to say here is this: a lot of people say that, oh, the price to book is, or the book value, okay, the book value is so high because it also include non-performing loan. So not true. So not really true. They already have minus off the doubtful debts. Doubtful debt. Okay. Okay. I repeat. Okay, why a lot of people question, then how come why the price to book value is less than 1? It doesn't make sense, right? Because money is money, correct, right? The book value is actually backed by money, but of course the money is being loaned out. So now we're actually using 60 cents to buy $1 of loan. Okay. And the only worry is, okay, that $1 loan out, we can only get back 60 cents, which what I'm trying to say here is it's actually not true. It's actually not true. Okay. Number one, okay, when they actually calculate the book value, they already take into account the doubtful debt. So let me just go through the mathematics. So as you can see, total assets 14276, of which the main asset is the loan that's actually been loaned out 11650 here. And in calculating this 11650, they already minus off the doubtful debt. Okay, minus off 18 million here. Sorry, minus off 18 billion here actually. No, sorry, 18 million. And minus off 6 million here. Okay, to actually get this number. Okay. Now, if let's say I even kiasu a bit more I minus off all the NPL. That means whatever that is considered non-performing loan, I minus off. I don't take it as asset. So what I did here is this: I just take the net equity. I minus off 193. I get 1847. The book value without non-performing loan is actually 412. And the price to book is still less than 1.64. So really, I cannot understand. I'm actually using, okay, you all know the concept of book price to book value. For $1 you buy what is actually you're buying. So in this case, you're actually buying, okay, the assets are actually the loans. As you can see here, the assets are mainly the money they're being loaned out. So when I buy the share, I'm actually buying this loan amount. And now I'm actually using 60 cents to buy $1. Okay. So the only chance that I am buying not good when I lend $1, I only can get back like maybe 50 cents. Then I lose money. But in this calculation, after taking non-performing loan, okay, my price to book is actually 65 cents. So that means the $1 lent out that I'm quite confirm I can get back, I'm only paying 65 cents for it. So if you ask me, is it cheap or not? I hope you all know what I'm trying to get at. Okay. If you all need me to repeat, let me know. Or if you all got question, please ask. Basically, I'm not supposed to outright say it's very cheap. Hope you know what I'm trying to get at. Okay, but I think you know what I'm
Can I
yeah.
ask a question, Mr. Chua?
Yeah, yes.
Because this one price to book is below the 3 big banks, right?
Yes.
But I was just wondering, what is the historically? I remember in the past I read somewhere that maybe the price to book for certain finance companies are always low, like below 1. So I don't know whether this is the case for. I don't know how to find the information. Say the historical price to book value
Yeah.
for Leong Finance.
Correct. So for Leong Finance, so far lah, ever since I take a look at stock, I think for the past 10 years, it has always been below 1 lah.
So
And-
it may not mean that it's cheap, right? Because if always the market has regarded this company as 0.6, then it is just the norm for this company. So not necessarily mean that it is a sign of undervalue.
I mean, sure, you can see it that way lah. But if you tell me that I'm used 65 cents to buy $1, I don't know. If you say that I give you 65 cents, I use 65 cents to buy $1, you still say it's expensive. It's not cheap. I don't know lah. Of course, you want to argue that cheap and expensive is subjectivity, sure. But or put it this way lah. If let's say, for example, one day this company go liquidated, they have to pay you back. They have the money to pay you back lah. Put it that way. Okay, so Sumi asks, bank assets include banks. They do, but the main is actually still the loans. As you can see here, these are the assets. The property, plant, equipment is about 50 million. And anyway, the property also mark to market lah. Okay, also mark to market. But relative to the loan is actually quite small. Okay. But I do agree with Anne in the sense that, so of course, this is cheap realistically speaking, but somehow the market actually don't respect it lah, for whatever reason. That one I'm not too sure lah, but anyway, you all have to make your own decision. I just present the numbers. Okay, the other thing is, so for basically for finance company, we cannot do the 6 tests. Their balance sheet is very unique. So to actually see whether they're healthy or not, we actually look at this thing called the capital adequacy ratio, CAR, capital adequacy ratio. To actually give a very simple explanation, okay, what happened here is this: they look at the total capital they have versus the amount of assets that are actually being loaned out lah. Okay, by the way, banks work in a very interesting manner. When a bank's got 1 million, they can lend out 10 million. So for if you can recall my econs lesson, I talk about it. So basically, they got 1 million, can loan 10 million. So like in this case, their capital is about 2 billion. They can actually lend out 11 billion. Okay, totally legit, So based on MAS, okay, this I actually got it from DBS report. So as long as this number is more than 12.5%, it's actually considered good. So in fact, if I'm not wrong, DBS is doing about 14.6. So for Hong Leong Finance 16.1. So if I'm not wrong, yeah. So the numbers is in fact better than the DBS one. Okay. Pricing analysis, current price is 262. I don't think it should have shifted much. Okay, so based on price to book, I think it's cheap, but I do agree with Anne. If you actually buying this, hoping that suddenly people wake up, the price will become 1, it's not going to happen. Okay, it's not going to happen. Okay. But my point here is this: if you actually buy at this kind of book value, even if the company collapse, okay, I am quite certain that they have enough asset to pay me back. I'm actually coming from this perspective. Hope it's clear. Okay, so and the other thing that enticed me here is this: the dividend yield is 6.49%. So base 6.49%. Yes, correct. So it's actually very attractive dividend. Is a lot higher than the past 5-year average. P ratio is actually very decent. So again, like I said, I'm not too sure whether the price can climb up, even though I'm in opinion it's cheap now. So I don't know why historically it hasn't gone, price to book hasn't gone above 1 for other reasons. I'm not too sure why. In fact, very interesting. I remember easily 7 years ago, I went to attend the AGM, Hong Leong Finance AGM. I also asked the same question. How come the price to book is always below 1? Oh, then that time was Mr. Kwek Lim Beng, who was actually quite angry. He gave me a very angry answer, I still remember. Okay. But then I believe at this kind of price, at this kind of dividend yield, I think it's quite decent. I think it's a good income stock. And I don't see a strong reason for the price to drop. Oh, cannot share with you the answer. Not politically correct for me to say here. But he actually gave quite a angry answer. That's all I can say. Okay. Okay, so if you want my very clear conclusion, so again, I'm not saying that the price is undervalued. The price will chiong back to price to book 1 soon. No, that's not what I'm saying. I'm just saying that at this price, I don't think there is a strong reason for the price to drop. And I'm talking about income stock up. So if I buy this for the dividend yield, and dividend yield about 5-6%, I think it's quite a decent stock to hold in my portfolio for long term. So that is what I'm trying to say here.